What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. Now, I apologize for that 2-day break that I did take this week. I was hanging out with family over the holiday, so I hope everybody had a really good Thanksgiving, was able to kind of reset, refresh, so we can go into not only today's trading day, but next week, kind of with a different, more relaxed mindset. Now, we have a lot of really important stuff that we need to cover in this update video. We are going to be taking a brief look at the Ortex data and the options chain, but I have seen so many different things start to come out over the last couple of days that I think we really need to address. Now, in addition to this, we are going to be talking about the broad market today and exactly what is going on, and if we are headed into another pretty significant correction, maybe similar to what we saw last March. But we're going to have to wait and see, and I'm going to go over exactly my thoughts on what we have going forward and kind of tie them back to what we've been saying about the broad market and how it's going to affect AMC over the last couple of months. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So the overall market is having a very, very red day today. There are new lockdowns coming out. There's a new variant that has kind of resurfaced, and this is really a big fearful move. Now, we're seeing this reflected in a lot of different stocks. Most of the stocks, honestly, unless it is one of those inverse ETFs, but AMC at the current time that I'm recording is trading at $37.20, down about 4.32% on the day. Now, coming over to Ortex over here, we can see that the estimated short interest that Ortex has now is 16.08%. Remember, we did get that exchange reported data a couple of days ago, and that came out at 17.05%. We have utilization at 74.95%, but what we have to keep in mind is that this data that we are seeing can be manipulated. We don't know to the extent how far this data that we are seeing can be manipulated, but what I use Ortex as just kind of a bare baseline minimum of where we are at with the current short interest in all of the data metrics that we are seeing. And if we see anything start to freak out that isn't in line with the normal trends, then that it is something to keep a deeper look into. Now, coming over to Stonko Tracker, again, we are really focused on that January expiration date because of all of those options that are already in the money, that are out of the money, and the amount of contracts that are most likely going to start popping up on this expiration date. Every single time we've seen a significant run up on AMC, we've seen the option chain have a crazy high open interest with some really insane concentrations of this open interest on specific strike prices. So again, when we think about when AMC could have its next potential run up, it looks like it could start to really formalize in January. But again, no real dates can really be given because nobody really knows when this situation could fully play out. Now, let's get into this one situation that I've seen really getting thrown around over the last couple of days, and this is the concept of stopping the buy part of the original strategy and just holding your AMC shares. Now, the logic and reasoning behind that side is that the brokers could be giving us synthetics or IOUs when we were entering into those trades, and we don't necessarily own these real shares, and they are then able to suppress the price and the price action by essentially us continuing to buy. Now, here are a couple of things that we really need to keep in mind with this entire situation and why it doesn't really make a whole lot of sense. Now, it really comes down to two main points and areas of action that we can take in order for that situation to not necessarily be a problem. And it's not to stop buying. When we think about what actually happens when orders go into the market is always going to default to the basic principles of supply and demand. This is about essentially a chain reaction. If you are not buying, then there's no incentive to generate those IOUs. So yes, there would be less of them, but that does not mean that these brokers are going to automatically start closing out these random BS IOU synthetics that they have created. It just takes the pressure off of them. And then think about it as well. If retail were to start stop buying. Is that going to stop the short hedge funds from shorting? Absolutely not. By taking away that buying pressure that gets put into AMC on a day-to-day basis, that would limit our ability to essentially just have normal price action. I know we don't see normal price action on AMC very often. It is a very abnormal stock, but taking away essentially our own buy button would cause the price to absolutely tank. Now, I want you guys to think about this concept as well. If this situation with synthetics is that big of a deal, okay, well, most likely we started buying a significant amount of those right after the January run-up when these brokers were unable to fulfill those orders. Now, that first run-up was from 2 to about 25. Then we had a very long consolidation period where more people were buying, potentially buying real shares, potentially buying these IOUs from the brokers. And then what happened? Well, we ran to an even higher price level. So when we think about the fact that this is a potential for what is actually going on in our market, where we are getting these IOUs and the brokers are messing with our orders, yes, it is a problem. But when it comes time for the next big run-up, it puts more pressure on these institutions that the next run-ups could be even more substantial. And here is the other thing that I really want to keep in mind. When these ideas start to come out about a new concept or a new piece of due diligence, what I've seen is that people automatically flock to that new idea and completely forget everything that people have been working on over the last couple of months. Now, think about this. If these brokers are the ones that are giving these IOUs or these synthetics, well, there's a really, really easy, simple solution to this, and there's actually two of them. The first one, very non-controversial. If you end up wanting to avoid all of these brokers, you can just order to a lit exchange on Fidelity or on any of these other brokerages that allow you to do that, and you can just bypass that broker or the market maker who is going to be messing with these orders. Now, the second is a little bit of a controversial topic, and before we really get into it, it is DRS with ComputerShare, but fair warning, I have not DRS'd any of my shares. We are just talking about hypotheticals here. In my opinion, I like to be more nimble and more active in what I can do with my positions, so the cons really outweigh the pros in this situation, but that is another solution to the problem. By taking away our own buy button, I think that does much, much, much more harm than good in our overall situation. But again, I am not here to tell you what to do with your money or your position. If you want to stop buying, you absolutely can. If you want to keep buying, you absolutely can do that as well. The main things that I want to get across in this video are just why. What is the logic behind this and how does it play out? And what are the alternatives for if this is a real situation going on? Well, how can we avoid it? So that's just kind of my thoughts on this. There are many, many different alternatives on if that is a situation that is happening right now and it is adversely affecting us. Well, one, it's most likely going to lead to a more aggressive price run-up when we start to have that next run-up. And two, there are many different ways to avoid and bypass these brokers. Now, let's get into this situation with the broad market and what my thoughts are and if this situation is going to continue. So coming over to this article, the Dow drops 900 points as new pandemic variant sparks market sell-off. Now, when we think about what we've seen in the past and what the market has been pricing in, we've seen many of these variants start to pop up. This time it is popping up in South Africa, but the reaction to this new variant is very, very different from what we've seen in the past. We can see here, the UK temporarily suspended flights from 6 African countries due to the variant. Israel banned travel to several nations after reporting 1 case in a traveler. 2 cases were identified in Hong Kong. Belgium also confirmed a case. So what we're seeing here, it really looks like a wild overreaction to one of these new variants. Now, I have heard some different theories that this has to do with oil. Now, we are going to be taking a deeper look into that this weekend, but the timing of all of this is very, very peculiar. So what we're seeing most likely today is an overreaction in the fear of a March 2020 situation happening again. Now, we are going to see the volatility indexes really start to pick up. We have seen a lot of volatility in the S&P 500 and the overall broad market today. And when we think about what we were talking about over the last couple of months on what could trigger the next market sell-off, crash, correction, whatever you want to call it, We knew about Evergrande. We knew that the debt ceiling situation was going to start popping back up right around this time, and the wild card was going to be the Fed. Now, what was really going to cause an overall market correction sell-off, and again, this is not really what we're seeing today. We're seeing an overreaction based on fear, but that event is going to be an unrelated, sort of a black swan event that nobody sees coming. If this starts to develop, yes, we are going to see a pretty significant market sell-off in the short term, but what we've seen in the past is these dips get bought up very, very quickly. Now, how does that affect AMC? Well, the overall market is having a very significant red day today, and AMC is coming down with it. I know everybody really likes to harp on this concept of negative beta, but as we're seeing today, and as we've seen recently, negative beta is not going to come and save us. What a lot of people are looking at for that negative beta number is the 1 year beta. That's not really enough time to have enough data in order to determine whether or not a stock is going to be very, very closely correlated to the market or correlated at all. And when you're comparing a stock and trying to figure out what its beta is, you need to typically use a similar index or something that is going to move similar to that underlying stock in terms of exactly how the stock moves, what industry it's in, if there is any potential manipulation or funny business going on. So beta is a way to look backwards to see what has happened in the past, but you cannot use it to see what happens in the future. So if the market does sell off, here is what's most likely going to happen with AMC. We are going to see very, very significant red days, but there's a silver lining. If we start to see a lot of red on AMC, what do you think the shorts are going to do? Well, they're going to add to their short position. Now, if AMC ends up getting pushed down enough, well, there's going to be a significant amount more short positions in AMC, and if they then decide to start closing out their positions, we could end up seeing that next significant run-up start be more aggressive, but it just starts at a lower price. And again, guys, nothing has really changed. This isn't some wild short ladder attack manipulation day on AMC. This is just the broad market freaking out over these new lockdowns. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great day, and I'll see you guys in the next one.